Stocks, meanwhile, bouncing back from yesterday's sell-off, but higher for just the first time in 4 days. So should investors buy the rally here, or are we looking at a blue Christmas for stocks? My next guests differ in their opinions. Let's bring in Delano Saporu, New Street Advisors founder and CNBC contributor, and Jeff Crumpleman, chief investment strategist at Mariner Wealth Advisors. Guys, welcome. Delano, there's a difference, to quote a favorite movie of mine, between Mostly Dead and All Dead when it comes to Build Back Better. How much does that matter for these markets going forward?
I think that matters a little bit. So I think the markets were kind of pricing in some fresh cash, especially for infrastructure. And you saw the re-rate that we've seen, especially with the new Omicron data showing, investors are really seeing that there may not be as big of a slowdown when it comes to, the GDP growth. And that's a couple of big things that are playing as themes in the market. So I think the investors right now are trying to gauge what is happening in 2022. And that's why you're seeing these swings in the market. I think your highest conviction names right now, you probably want to look at putting cash in. If you're looking at what happened in the tech sector over the past month, we've sold off quite a bit. Look at the consumer discretionary, sold off quite a bit. So investors can look to put cash to work in some of the high conviction names right now, John.
Jeff, you say that you wouldn't be surprised to see a sizable correction in 2022. How much of that has to do with the concentration dependency, say in the S&P 500, on just a handful of big tech names that have pretty healthy valuations at this point?
Well, it's based more on, I think, than just the market being led in a big way by the largest of the large cap. I think there are three reasons why we look for a correction. One, we're just due. It's been over a year since we've had a 6% plus correction in the market, and we've had 80% cumulative gains over the last 3 years in the S&P, and it's dangerous to say it's different this time. It would just be very unusual if you didn't have a correction. We're in the middle of a midterm election cycle, and you tend to have greater downdrafts and a little bit of a more sober market in the first 10 months of the year. And then finally, we have accelerating risks. We have really unknowns on the inflation front. We think it will be benign and moderate, but there's a lot of unknowns on that front. You have a transitional year in policy, and all of those things, I think, add up to a likely intra-year correction. But don't get me wrong, we're still positive and do think that we'll have further gains in the S&P, probably single-digit type gains next year, but some bumps along the way, that's all.
Shepard Smith here. Thanks for watching CNBC on YouTube.